Well, hello, this is Jeremy North with your educational economic update for June of 2021. Well, in this month's video, I will discuss major headlines that influence markets in May of 2021. Please stay tuned at the end of this video for the always exciting required disclosure statement. Well, May brought us economic positives with major slowdown in COVID cases and deaths, along with continued stimulus from the government. However, this was mixed with rising inflation and interest rate concerns, which overall considerably caused jitters in stock prices for the month of May. The market showed mixed results, with the S&P 500 index having a slight monthly gain of around 0.5%, while the tech-heavy NASDAQ lost around 1.5%. The Ag Bond Index was up just over 0.3% for the month. The economy continues to improve from its pandemic lows, as around 86% of companies reported higher than expected earnings, with an average earnings growth rate of around 51%. However, any enthusiasm from this was dampened by the sharp rise in consumer prices. With inflation rates roaring back, investors are concerned it may lead to rising interest rates. This was the primary driver for the drop in share prices with many of the leading tech companies last month. Federal Reserve Chair Jerome Powell's assessment that the increase in consumer prices of 0.8% in April and 6.2% increase in year over year for the producer price index, which I'll say was the largest since 2010, was due to the recovery from the pandemic lows. Well, this was confirmed by U.S. Treasury Secretary Janet Yellen, who said the continued monetary support packages, in particular President Biden's proposed infrastructure package, is not enough to cause an inflation overrun. She stated that any spurt in prices resulting from the rescue package will fade away next year. In addition, she feels that supply chain bottlenecks that are causing some of the increased prices and a surge in spending as economies reopen are transitory. G7 finance ministers and central bankers held a phone call on May 28th in which the group agreed with her assessment. This appears to be confirmed by the recent velocity of money measurement, which continues to be at a 60-year low. So the velocity of money is the number of times $1 is spent to buy goods and services per unit of time. A higher velocity is a sign that the same amount of money is being used for a number of transactions, and thus a higher velocity indicates a higher degree of inflation. As I stated last month, the amount of margin interest continues to be at levels not seen since 2008. Again, margin interest is the interest investors pay when borrowing to purchase securities in brokerage accounts. When the total margin interest is this high, it can indicate great exuberance in buying more stocks, which some analysts see as a sign that we may be approaching a top in the market. While this may be a good sign to remain cautious, the positive Federal Reserve and Treasury Secretary's outlook on the economy, interest rates, and inflation is reason to maintain an overall positive near-term outlook. If you have any questions about how the recent economic reports could impact your long-term goals or portfolio, I am here to talk. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 636-896-4052. We are always happy to talk. With all that being said, here is the disclosure I am required to read, and I'll do my best at making it super exciting. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investing involves risk, including the potential loss of principal No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results. Thanks again, Jeremy North, signing out for June of 2021. I hope you have a wonderful summer. See you next month. Take care. Bye.